Welcome to this week's live ASX strategy session. Thanks for joining me. Great having you with me for another show. Lots of interesting things to have a look at today with the stock market, the commodity markets, and of course, any stock codes you'd like me to have a look at. We'll go through them at the back end of the show and see what the technical outlook for those appears to be. As always, everything today, general commentary only, doesn't take your personal situation into account. Having been through all that, let's get into our first chart. And starting off with the ASX 200. And yeah, so look, the ASX 200, the relentless rally has continued through the week. Not only was this one of the great panic sell-offs of all time, it's also been one of the biggest scrambles back into the market. But how much longer can this continue? I'll get to that in a moment. There are also some interesting statistics around the S&P 500. In fact, it's a 25-year-old record, which I'm going to tell you about. And I'll tell you more about that in a little bit later, just after we go through the ASX 200. I think you'll be surprised. But before that, before we get into that, let's start with this latest price action in the ASX 200. So prices got to within 1% of a new all-time high yesterday. And that was boosted by there was a solid rally on Monday, and then another solid rally on Wednesday. And we've seen strength play out across the ASX. So it's not just a big cap rally. The mid caps are rallying, the small caps are rallying. It really is broad based, and broad based participation is positive, and it's positive because it's typically associated with a healthy market when you get that broad participation. It's when gains are attributed to a fairly narrow group of stocks, or maybe just a handful of big caps. That's when I start to get concerned, but that's not the case here. I'll talk more about the small caps and the emerging companies a little bit later. But I think another positive here is that the moving averages have now swung around to the positive, with the 50-day moving average being this moving average in red, being above the 100-day moving average in blue, and prices are becoming more established above both the moving averages, for that matter. It's interesting. The ASX 200 has now closed above the 50-day moving average. That red line coming down here, it's closed above the 50-day moving average for 30 days in a row. So that's a clear indication of an underlying momentum shift. And every bullish period is associated with lengthy stretches above both the 50 and the 100-day moving average. And we're starting to see that take shape now. So from this perspective, I'm happy to be long stocks, and that's something we've been discussing over pretty much over the last 6 weeks, about getting back into positions after that abrupt sell-off. But would I be, just looking at this price action, would I want to be an aggressive buyer at current levels? And my answer to that is no. I don't want to be an aggressive buyer right here and now. You'll probably know that I've been talking about the prospect of a pullback towards the 50-day moving average over the last few weeks. In fact, it's been the last 3 weeks that I've been doing that. But prices haven't. So it was around here. It's around this period, around 3 weeks ago, when I started saying prices were getting stretched above the 50-day moving average, and some sort of a pause was probably on the way. But prices have kept grinding higher. We did see some sideways price action for about a week when I initially started talking about that, but the ASX 200 hasn't come close to coming back to this 50-day moving average. So then it raises a question: could prices just keep advancing, and maybe we don't get a pullback towards the moving averages anytime soon? And I think that's always a possibility. And if that happens, I'm long stocks, as we've been discussing over the last 6 weeks. So if that were to happen, then I can still participate in any upside despite not wanting to be an aggressive buyer now. And I also bought a new stock this week, so I am still adding to my exposure. I'll tell you more about that. I actually show you that stock a little bit later when we discuss the small caps. So I am playing this. I am playing this for the long side, despite my apprehension towards really piling into the market at current levels. But I still believe the odds suggest that near-term upside is possibly limited at current levels, which is why I'm just being patient with adding new money to the market after such a long advance. So why do I think this? Why do I think this upside could be limited at current levels? Well, the ASX 200, it's now about 20%. It's put on about 20% from its lows. So this is exceptional on its own. But I think the fact that it's put on such a large advance without having a meaningful pullback throughout any of that rally, well, that's actually a rarity. I had a look back at similar situations. Well, I had a look for similar situations over the years, over the last, say, couple of decades. I'll show you what I found. And what I was specifically looking for, I was looking for instances where prices quickly rose from below moving averages to above the moving averages. So let's go through that. So we've got the ASX 200 here. I'm going to switch over to the All Ordinaries because it's got a longer price history. And I've already got this all set up, so we're ready to go. And below here, this is an indicator showing how, you've seen this indicator recently, it shows the percentage above or below the 50-day moving average the market currently is. So here's our current situation. From below the moving averages to above, we've got it's 20%. It's 20% rally, not too much in the way of the pullback in between. And as we know, prices are stretched. They're around 4%, maybe a touch above 4%, above the 50-day moving average. So let's just go through. Here's the most recent similar example. So it's a 15% gain from bottom to top. You see prices got stretched. They ultimately came back to the 50-day moving average. So didn't continue going onwards and upwards endlessly. Coming back a bit further, go back. We've got a couple of examples back in this period here. You can see both of them from below to above. They're both around, so one's 14%, one's 16%. You can see both met that criteria of becoming stretched above the moving average. And then ultimately they both come back. Pull back towards the 50-day moving average. This example from 2019 doesn't get all the way back, but it gets pretty close. So I think that's near enough to say, yeah, the market pulls back. Let's go back a bit further. Here's an example from 2013. Sharp sell-off from below the average to above. You can see prices get elevated, but they stay elevated for a bit, and then they do get that pullback back to the 50-day moving average. That was a 15% rally. I think I've got one more. Yeah, here's one more. Last one. So this was a 25% rally. This was just prior to the GFC. Now, let me just say at the onset, this is not. I'm not using a GFC example to suggest a GFC is coming. It just meets the criteria that I'm looking for, where a market's gone from below the average to above. This was a 25% rally. So this is the biggest one so far in this sequence we've looked at. The current advance is 20%. This is 25%. So it does show the market can do some extraordinary things at times. You can see where it got stretched, got just above that 4% mark, held that for several weeks, but then gravity kicked in and it did pull back towards the 50-day moving average. Don't worry about what happened after. That's not what we're looking at for the purpose of this. It's just to say that a market that gets heavily sold and then rapidly rises, gravity does kick in and it does pull back towards the moving averages, and 25% is the biggest example I've seen. Could go further back, but yeah, I think you get the point. Coming back to current day, here we are now. How much further can this run? It's by all means, it could go a bit further. No one knows when this rally will run out of steam. So what I'm doing, it really is about balancing risk. I'm happy to hold on to stocks that are happy to hold what's working. If I'm in stocks and they're rallying, I've got plenty of stocks which are rallying. Great, hang on to them. But and I'm also happy to buy. I'm happy to buy stocks that are breaking out of ranges, rallying off moving averages. I'll give you an example of that a little bit later. But what I don't want to do, I don't want to chase what's been running hard, and that's due to the risk of that pullback that we've just been discussing. So just coming back to the ASX 200. Yes, this grinding rally, this grinding rally could have more in it, but as the ASX 200, as it approaches this all-time high, even if it gets through it marginally, I think as it approaches that region, I think the odds of a pullback towards a 50-day moving average. It could be something which pulls back over several weeks. It doesn't has to be a sharp drop straight back in one day. It could just be grinding sideways and the averages catch up. Different ways that prices can come back to the average. But I think the odds of that pullback do increase. And as always, I've got my wide trailing stops to help see off pullbacks when they inevitably come. Now, if you're getting some value from this, please hit that like button and please leave a short comment. Just, hey, thanks for the video, or tell me what you think the market might do, whatever you'd like. And but just shows YouTube that you're engaging with the video, and then YouTube shows other people, and that really helps. So please do those things. Now let's move over to the S&P 500, and it's been an ongoing consolidation for the S&P 500. Well, for most of the S&P 500 stocks this week. And this should come as no surprise when you consider the index has just had its strongest May performance since 1990. It's interesting. We hear a lot about sell in May and go away, but it just goes to show that I think we should be making our trading decisions off the price action, not off the calendar or not off little sayings like sell in May and go away. If you sold at the start of May, you'd probably be looking on now with regret that you'd let a saying shake you out of some of your good positions. So yeah, look at the price action, not so much the calendar. So what does the price action tell us now? Well, prices have generally been travelling sideways for the last 3 weeks. Yes, there was a new recovery high during the week, but that's largely due to rallies in Nvidia and Microsoft. Both of those two big. I think they're the two largest stocks in the S&P 500, so they're going to have that significant influence on the overall index. The broader market, when you take those two out, has been more subdued over the last week. I'll show you what I mean. Let's just jump over to the equal weight. Have a look at the S&P 500 on an equal weighted basis. And when you rank all the stocks equally and you remove that oversized influence of a few big stocks, you'll see that prices remain below their May high. It's been this sideways grind over the last 3 weeks. And I think that overall, the price action we're seeing, I think it's positive. The sign so far is that the dips are being bought, which of course is one of those things we want to see. And you'll also notice that it's been a shallow pullback to the moving averages. And the pullback appears to be attracting buying interest above the moving averages, which is also an important and an encouraging thing to see. I think why this is important is because it shows that buyers are being fairly quick to buy the dip, and it's not a case of sellers rushing in to sell the rally as we've seen in other times where you get these big. Well, that's when you get a bear market rally, rushes up, and then the sellers are just want to unload and they sell straight into it, and the market goes down. That's not what we're seeing here. So this appears to me to be a market that buyers are still looking for a way into, as opposed to investors looking for a way out of. And I think that set up that sets up a positive backdrop going forward. You'll also see the moving averages continue to turn higher. On the equal weight, they're close to crossing. It looks like it might need another week. If prices can remain stable, probably in the next week, the moving averages cross over for the equal weight. Of course, they've already crossed over for the S&P 500. So this underlying structure continues to improve. Just on participation, I'll quickly show you another measure, and this is a percentage of stocks which are above their 100-day moving average. And that's what we can see here. There's currently 52% of stocks above their 100-day moving average. And as you can see, the number of stocks above their 100-day moving average has increased significantly from the low. So it got down to a point where only 7% of stocks were holding above their 100-day average, and got up to 66% a couple of weeks back, 3 weeks back, now sitting at around 52%. So again, it shows an increasing number of stocks have been participating in the rally. I think a key factor in taking the market higher from here will be an ongoing participation, or a broadening of the participation. I think that's going to be an important thing for the market if it is to continue to advance. We want to see that participation broadening out. So this is an indicator that I think we should continue to keep an eye on over the weeks ahead. So just coming back to the S&P 500 to wrap this section up, I'm continuing to play this from the long side. The price action suggests that the interest is in buying the pullbacks, not selling the rallies. The sort of stock that I'm interested in, they're the stocks that are rallying off their moving averages or breaking higher out of consolidations. I think it's a case of going with what's working and then managing risk with trailing stops. And that's the way I'm managing my portfolio. I think that's the way to play this one. All right, so we're going to move on to the small caps next. We've got the US small caps, the Aussie small caps, all the commodities to go through, and then of course all your stock ideas. The stock I bought this week. Go through all that now. But of course that wraps up the free section. So if you're not a strategy session member, come on in, come and join. Doesn't cost very much, costs very little, and you're going to get information I don't think you're going to find elsewhere. So think about doing that, and also that interactivity of being able to ask about your own stocks. I haven't seen that anywhere else. So for a small amount of money, think about doing that. There's a link below. Click that. Come in. You won't be live this week. You get the replay, but you'll be live with us next week, hopefully. All right. Having said that, let's start. Let's start with the Russell.